Welcome back to News in Focus. Of course, we're still continuing the conversation with regards to South Africa's economy, surprising on the upside with a GDP growth of 0.5% in the first quarter of this year. Remember, it beat market expectations. Now, while the figures offer some encouragement, questions remain about whether this momentum can be sustained amid ongoing domestic challenges and global uncertainty. Joining me now to take it from an independent economical position, I'd like to welcome Patrick Buthelezi, who is an economist at Sanlam Investments. Patrick, absolute pleasure to have you on, and thank you so much for joining us.
Good afternoon, Mr. Patel, and good afternoon to all the viewers at home.
No, it's an absolute pleasure. Patrick, were you surprised, like what many have written with regards to a 0.5% GDP uptake for the first quarter?
Yeah, we were slightly surprised on the upside. So our expectations was that GDP was going to grow positively, but not as much as 0.5%. So it was very encouraging that economy grew by 0.5, so beginning of the year. And I think if you also look at how economies around the world in the first quarter performed, most economies performed relatively better. So it was a good start overall if you also look at how other economies performed. So it was a good start, very encouraging, but unfortunately, as you mentioned in your intro, that moving forward, there's some challenges globally as well as locally.
Yeah, and that's the sort of kicker to this, because who knows what might happen when it comes to that second quarter. I mean, I had, Stats South Africa before you came on, Patrick, and the conversation there was, given what might happen from, April, May, and June, at a time where there has been this global uncertainty. We've seen the Strait of Hormuz closing, which meant that oil and gas and the supply of it will be a big factor with regards to that. How much do the consumers here at home need to take cognizant of that?
Yeah, I mean, if you look at what has been driving economic growth in South Africa, especially from 2024 to last year, so the consumer was at the forefront. So the beginning of this year, what was a surprise for us was how low the consumer grew in the first quarter. It grew by 0.1%. In fact, what drove the economy in the first quarter was a collapse in imports because investment actually declined. So it was not driven by domestic demand. So in the first quarter already, there was some pressure on the consumer. And in the second quarter, you can expect that pressure to have continued, given where inflation moved to. Like, for instance, inflation in April, it moved to 4%, which is, I mean, quite high by the Reserve Bank inflation target framework. So with inflation having moved higher, so what that will do, it will squeeze the purchasing power. And household accounts for over 60% of expenditure in the economy. So if consumers are squeezed, then the economy as a whole will be under pressure. So that is why the second quarter we expect the economy to hit a bump because of the squeeze coming from higher energy prices.
Yeah, and of course, as we speak, Patrick, fuel, diesel, sitting around that sort of 30 Rand a litre mark, unleaded petrol sitting around the 27, 28 Rand per litre mark. When we do get to that second quarter outlook, it's going to have a different take, isn't it? You've got the Reserve Bank who's hiked up interest rates. You've got inflation that has ticked over. And I guess that's where consumers need to sort of brace themselves that come the second quarter, it's going to be a different outlook, isn't it?
Yeah, exactly. So it's going to be a bit tough for the consumer because the consumer will be squeezed by, number one, as you highlighted. I mean, we've seen fuel prices increasing in March, April, in May, and then in June we saw some decline only in diesel. But in terms of petrol prices, we saw petrol prices increasing. but also businesses. I mean, if you look at how business confidence has performed in the second quarter, so after improving nicely to close to 50 index points, in the second quarter we saw the business confidence retreating, which is, which is disappointing, because what we want to see for the economy to continue growing at a faster pace, we want to see businesses investing, but businesses cannot invest if they're not confident about the economy. But what is holding businesses back is uncertainty about this conflict, because as much as there is this peace talk that has been around for a while, it's still fragile, and there's still a lot of uncertainty around this peace talk. And the Strait of Hormuz, as you also indicated, is still closed. So that is why oil price is still very high at above $90. And I think what has been helping a lot in South Africa is the currency. The currency has been holding up relatively better. The currency just fluctuating at 14.50, which is encouraging. And also the underlying support for this economy is the push on economic reforms. I think that push on economic reforms, so it continues to provide the support for the economy to continue to move forward. But that being said, so higher energy prices in the second quarter can be expected to have weighed on the economy, as we have seen with business confidence also retreating.
Patrick, the growth projected outlook for South Africa was to sit at around 1.1% for this year and around 1.4% this year. Of course, this is going to have to be revised given what we're seeing right now in the Middle East. That target's going to be a bit impossible, isn't it? Just looking at the year 2026 to get to around 1.1% GDP growth.
I think in our case, our view is that this war is expensive. It cannot go on forever. So we expect to see the war ending. And when we see the war ending, we will see oil prices declining. When we see oil prices declining, then fuel prices will decline, and worries about inflation will ease. And central banks, for now, they are concerned about inflation that is picking up, because we're not far away from 2022. If you think back in 2022, the cost of living crisis that we saw coming out of COVID. So central banks, in South Africa, for instance, the Reserve Bank hiked, and we're seeing central banks around the world responding to that. But if this war were to end and oil prices declining, because where we are at in terms of monetary policy stances around the world, monetary policy stances are still kind of neutral or just above neutral. So which means if oil prices or inflation worries were to dissipate, then we could see central banks cutting rates again, or resume the easing cycle. So the view is still that the war ends. When it ends, then oil prices decline. Then central banks stop worrying about inflation. So our view, we're still expecting the economy to grow by about 1.2%. Our expectation for this year was that the economy will grow much higher, say 1.6%. And we started very well, 1.9% on a year-to-year basis. In fact, that is a good start. In the first quarter, the economy, if you compare to the quarter ago last year, the economy grew at about 1.9%. So it's a good start. So that 1.2%, even if we slow, it's still kind of achievable. But there's a caveat to that. The war must end soon.
Patrick Buthelezi, always a pleasure to have you on. Thank you so much for joining us. Much appreciated.
Thank you very much.
That's Patrick Buthelezi, economist at Sanlam Investments. Our extended conversation today, we're going to be speaking to Professor Jeff Halper. A report from American media is showing that Israel is spying within the Pentagon. Yes, within the Pentagon, a very important institution where massive military decisions take place for the United States of America. Now, what does that mean for the relationship between Tel Aviv and Washington amid the current conflict that is happening with Iran? And of course, Donald Trump, who has had some harsh words to say to Benjamin Netanyahu, the Israeli Prime Minister. I will be speaking to Professor Jeff Halper after the break. Do stay tuned.